Hi there, Frank here for premium members for the trading day of May the 27th, 2025, a Tuesday. So as you know, markets will be closed for Memorial Day, the 26th, a Monday, and I will be traveling tomorrow. So next time we'll be back here with a video on the evening of the 27th, a Tuesday, coming to you from Atlantic Canada at that time. In the meantime, here's a little longer video to guide you through the weekend and as we get ready for next week, some important events and hopefully some useful analysis. And so let's do it. Okay, so our reading of the market has been correct. No other way to say this. And there's a couple of lessons here depending on what time frame you trade, and actually regardless of what time frame you trade, so bear with me for a second. First of all, about a week ago we said that this either turns into a slide, which means no pullback until it reaches the top, or option B, we will get a pullback. We also said go back, because I remember what I said, I would prefer a pullback like we always do because we trade pullbacks. Now, a couple of days later, we do have the pullback. So this is our second opportunity as we climb back up here. Most likely we have to add because we don't know the future, but we all know that. Okay, so this was our first pullback. Nice bottom tail before, preceding, led easily to the Keltner channel. Now we have the second pullback. What do we expect to happen? I mean, seriously, guys, if you've been with me for a while, what are we expecting? We expect a move towards the highs. It could fail. Anything's possible. That's why we have to manage our risk. But by and large, one way or the other, we expect price to be up here sooner rather than later at 6,200-ish. So this is an opportunity for us traders, obviously, right? Okay, so what are we expecting? Well, sometime in the near future, we're going to expect a long signal here and an opportunity to increase our account size. Now, we need to make a plan. What's the plan? Depending on what the candle brings on Monday, by and large, look at this. The plan is most likely going to look something like this. Okay, so this here is the area of business. Now, where exactly 5,900, where exactly you want to actually enter the trade, and what kind of level of automation you want to use to enter the trade, BT or Pro STR, and what size you want to do it with, or if you want to do it on the ES or the MES or the ETF or SPY or whatever. These are all details. These are just details. Important details, but these are personal details, so nobody can tell you you're the only one who can make a plan with those details all in place. This is the overall picture. We want to go from here to here, and how we do this exactly will depend on our resources and circumstances and preferences. Okay, so I hope this makes sense, and I hope you see that 2025 is no different from any other year, economically, politically. In many ways, it's very different, of course, but as far as our job is concerned, it's a potential trade, it's a setup, we do what we do, and that's all there is to it as technical traders. That's kind of, for me, the beauty of the thing, because we don't need to get a PhD or read the Wall Street Journal for hours and hours every day to understand what is the right thing to do. Okay, I also want to say a few things about the smaller chart, and forgive me if I'm a little longer here, but I hope this will help some of you one way or the other. So as you can see on the daily chart, we have a pullback. If you're, depending on your time frame, obviously a pullback, like any pullback on the daily chart, has details on a smaller time frame. And you can dig down to a 1 minute chart if you want to. It's a lot of 1 minute bars within one daily candle. How deep you want to dig is all up to you. But I'm just going to dig down to the 4 hour chart, which means 6 candles in one day, correct? Now, what do you see? Well, you see a bull flag here which failed, and that can happen. When a bull flag fails, in which case it did, this development here on the 4-hour chart was basically just an indication that the bull flag on the daily is forming, because for price on the daily to come down, the structure in the 4-hour has to break down. And this is exactly what happens. So if you're a smaller chart trader, this was a breakout trade to the downside. It was a valid trade for you to the short side. That's why you see when two traders say, I'm bullish, and the other one says, I'm bearish, both could be right, depending on what time frame they trade. And even if I'm bullish on the daily chart, which I am, as a technical trader, nothing would stop me to get a quick short on the 4-hour chart or even a 15-minute chart if this structure wants to break down. One skill for a trader is to develop the ability to reconcile two parallel views. You could even call contradictory views of the market, but not really contradictory because the time frames are not the same. So I'm bullish on the daily, but I recognize that for price to come down 100 points, well, obviously it's going to come down the usual way on a smaller chart, which will be either bear flags or breakout trades. So that's why we are here where we are on the 4-hour chart. And if you did a short on the 4-hour, which was a 1-hour trade here on the 4-hour coming out of this failure, and we also said in many videos before that a failure of a pattern is an important clue to go the other way, or at least to look for opportunities the other way. So long story short, this just beautifully shows how we think about the market, and this is a real-time example of the opportunities that come our way and that we can take advantage of. Okay, so I hope this makes sense. On the 4-hour chart, again, we had the opportunity to quickly do a couple of good 1-hour trades, at least one of them coming, well, maybe two coming out of this failure of this pattern. But remember, we don't want to overstay our welcome, because on the higher time frame overall, in the grand scheme of things, we are bullish as we can be because we expect this price to retest the highs. Okay? So I hope it makes sense, and I hope this shows you how to reconcile and think both ways, perhaps at the same time. Now, if for any reason you're not comfortable thinking this way, just pick the time frame you want to focus on, and then you're at peace. There's no contradiction in your mind. But I think there shouldn't be any contradiction either, because it's not the same time frame. So this is a time frame management skill for traders, and again, as I always say, this is regardless of what level of automation you use. Even if you use BT or ProSTR or even totally manual, just work with the mouse every day of the year, it's still the same thing. Okay, the ability to think this way, I think, is an important skill. All right, let's look at some other markets. I'm just sharing with you some thoughts here. I haven't really rehearsed this, but I think this is very important. When I was looking at the charts, I thought, I got to share this with you guys because this is even more important than some of the other days when not much is happening. So here's the NQ. We expected a slide. We always say that there's, of course, no guarantee. Now, same thing is happening on the ES. We have a bull flag. Now, another lesson from this whole story, the saga of price, is that you can safely disregard the media. There's always news in the media. There's always, if there's good news or bad news, if the chart goes down, they're going to pick up some bad news. There's always some bad news by the tons every day, and some good news too. If the chart goes up, they're going to pick some good news. They always pick the news to accompany the chart that they can show people. We don't have to, well, we can be conscious of this game. That's okay. But we don't really need to play that game because this is just a bull flag for us. So you can safely disregard the media. I think mindfully, I think it's better if we don't follow the news closely, because then we can think independently. And certainly, please Do not bring your personal opinions about anything like politics or stuff like that into your decision-making process. That could lead to disaster. All right, now, so that was the NQ. No more slide. That's fine with us. Same story. Where would I want to go long? Again, I need to identify three things. Where am I going to enter if I get a trigger? Because right now this is a setup. Where am I going to put my stop? And where am I going to put my target? This is exactly what I can do in 1 second, you see? So I think I don't have all the candles now, so it's only Saturday. Monday morning, I could have a very large red bar. So it's a little bit too early. I wouldn't really put this here officially, but I just want to show you how I think. But Monday morning, I'm going to look at the open and see what happens. But let's just imagine for a second, let's just assume for a second that Monday, price will start to move up, and it turns out that this was the low, the recent low of the past 2, 3, 4 days. Then this is a good plan. This kind of stop is sufficient enough. This entry area, look at this doji. The breakage of this, the break of the high of this doji, or if you really want to be totally safe, then the break of the high of these bars would be a reasonable entry. Now, we also talked about the trade-off. The more information, the more confirmation you insist on, the worse price you will get. If you're happy or confident or satisfied with going into the trade with a little less information, then you get a better price. So if you want to designate the high of the doji as your entry point, you get a better price. If you want to wait a little more, Monday intraday, you pick a bull flag somewhere in the 15-minute chart and you venture in long. Wherever you venture, this is the map. This is the general, the overall map that should guide your behavior. As always, we need to manage risk. We need to do the math, or we need to tell BT to do the math. So never bet the farm. Any trade can fail. If you ask me, is it possible that you'll be down here on Monday? Of course it's possible. Everything's possible, but it's not very likely. So we always play the probabilities, and we carefully run the mathematics, or we tell our software to do it for us. So much about the NQ. Let's also look at the other two quickly, because there's more to come here on the index. It's beautiful bull flag here on the YM. Again, the structure is just jumps off the chart here. We know what to do. Any trader who trades like us, it's clear what must be done here. And the only thing that's individual is the little details and the mathematics, which means sizing of the risk. I also want to show you the RTY, because that is like the Mona Lisa today. It's just so beautiful. Check this out. Check this out. This is a potential measured move that would take us back to the high. I'm not saying this is, of course, is not guaranteed to happen, but it could happen with a very high likelihood, and something that we need to take into account. This is the area of business. Certainly the break of this, the high of this red bar would mean that we climb back up here, and if there's enough momentum, it would be a fantastic little area to enter the trade. We are fortunate, so fortunate in this universe, because if this low, if this bottom tail holds, what else do we need to know where to put the stop? Now, we talked about this many, many times before, that most traders think, and what you will read in most of the books, is that you should put the stop outside the candle, especially if it's a long tail. Well, there's another way of thinking. There's another way of thinking to put the stop just a couple of ticks inside the long tail, so that if it does come back, almost guaranteed that it will break the low, and then you get a lot of slippage. So you don't want to put your stop where everybody else puts the stop. If it does come back here, well, we'd better be out anyway. So I would say that, so on the small chart, here is the low of this candle, this beautiful, beautiful test of the lows. You see, a lot of stops probably have already been taken out in Friday's session. By the way, I think I'll be traveling, so forgive me if I'm not aware, but I think Monday is a U.S. holiday. I'm pretty sure Memorial Day. So markets could be only open for a couple of hours. And as often happens in thin markets, there could be some big moves. So if you trade Monday, markets will open probably till noon. So keep an eye on the developments here, okay? So this is the plan, and this is also an excellent opportunity to think something like this, you see? Something like this. Put the stop at 78 or 79, just a couple of points, just a little bit inside. Something like this. That's a good place for a little stop. And then this is a situation where obviously probably 50% is reasonable to remove 50%. That's how I think usually at 1R. But look at this distance here, which if we get up to here, most likely we'll cover this one way or the other as well. So this is a good opportunity to think of keeping a runner, if possible, back to 2,500. This is a fantastic opportunity. I can't emphasize it enough. But as always, there's never a 100% guarantee. I could be totally wrong. This low could break Monday or Tuesday, and then what the hell, we were wrong. But when I see this, 7 times out of 10, what happens is what I expect to happen. So now you know as well. Okay, let's look at some currencies. Now, another market where I'm confident that we are sharing million-dollar information with our audience. For weeks and weeks, what have we been talking about? We've been talking about the weakening of the US dollar. This is an opportunity, whichever country you live in, whichever money you use in your daily life. This is all about trading, and the USD is weakening, and there's nothing we can do about it, nor do we have to care much. Even if you're in the States, what we need to do is to trade appropriately. And look at this. Beautiful long setups in most of the major pairs, meaning other major currencies, 6E and the others up here. All those starting with A6. Those are the currencies that we trade. We prefer the futures market as opposed to Forex because American futures markets are nicely and strictly regulated. And this is right now a trade in progress, a long in progress up to 1R on the 6E. If you want to look at some other currencies, just remember all these trades are correlated. They're just basically the same trade against the USD. We said that also a million times, but there's always new members on premium, so forgive me if I'm repeating these things, but this is crucial. The 6A, you haven't missed anything yet. It's triggering now on the daily. 6B is in progress along. Remember on the daily? Beautiful, beautiful. Look at this. Almost hit 1R in Friday's session, and we already passed 1R on the 4-hour chart. This is just how this whole thing works. And I could look at the other one too. I'll look at the Swiss franc. Of course, we don't trade all of them. I'm showing you these because most of the time I pick 1 or 2, but I'm not going to do all of them because these trades are strongly correlated again. But it gives us important views also from other asset classes. For example, you can guess precious metals, which is what we're going to look at next. So USD is weakening, and gold and all the precious metals are priced in USD. What does that mean? That price will go up. Price will go up. We expect gold to not stop at 3,500, even 4,000, 5,000. People talk about all kinds of numbers. We don't have to speculate. We just have to go trade by trade on the 4-hour or the daily. And you can size this nicely even with GLD ETFs. As always, we have options. Look at this complex bull flag. We expect this to trigger, and the previous high 3,500 is an obvious target first. We also, I'm repeating myself, but a couple of weeks ago we had a specific video about this situation where you may want to go long. You could be long already, but let's just imagine that you're thinking of going long now on the break of this bar and put on a trade something like this. You see? What do you see? The previous major pivot is within our 1R. This is a specific situation where we always say, take your profits at 1R if possible. except if you have a major pivot that falls within your 1 hour. You see, this pivot is closer than the 1 hour. In this case, I usually remove 50% at the major pivot because this is a first area where the trade has a good reason to fail. And some subset of our trades will fail at this point because the major pivot is a hurdle. Okay, so remove 50%, tighten your stop, and then of course you can trail it to 1 hour. Okay, let's look at some other ones. SI is next, which I think is about to burst. I think it's a good idea to be in position on silver. It could get going on Monday or anytime, any minute now. Look at this, and this is the plan. And if you're new to premium, let me mention what I mentioned a few times. Remember April 30, May the 1st, 2011, if you were here, silver was 50. The point is, silver has an obvious psychological target for the masses back up to 50. Now we're at 33. 36 is the first major hurdle. That's what we should be targeting with this trade. But if possible, try to keep a runner and potentially take it back to 50 or wherever it goes. Okay, also PAPL, two other precious metals, nice long setups. What did we say here a few days ago? PA, palladium, that we expect a pullback. We prefer having a pullback. That would be the first pullback after the breakout. Violation of the breakout area is a normal market action. This is what the market does. We cannot expect a clean break. It's always dirty. It always comes back, runs the stops, but when it gets going, this is usually a good area to launch a next leg up. Okay, and look at the details on the 4-hour chart. This is what an entry would look like. So if we climb back up here, probably we're going to get an algorithmic signal giving us an opportunity to take it back to a 1 hour on the 4-hour chart. And platinum ran ahead here, remember? Tested the previous pivot, so there's not much to do on platinum now. It could still keep going because on the weekly we have two major target areas, ultimately 1400, now it's 1100, but we need a structure to trade on the daily, which we do not have right now. Okay, and MBT, Bitcoin, 111 was it on Friday? Yes. 113. What we see on the daily, that it just retested the all-time high. You can expect a little bit of back and forth consolidation here. That's completely normal. This is not, right now, we don't want to be in a trade unless you think very long term. And the target was hit on Friday, so hopefully you are out of your Bitcoin trade, which we actually entered around 40, remember? Go back, look at the videos. This is where we started to talk about Bitcoin. The whole generation of young people, hopefully, are getting to know what a pullback trade is. Okay, and then finally, I just want to say one general note about the bond market. I'm not going to go into economic or political analysis, but I urge you to read up, Google, and stay informed and be informed about the U.S. bond market. Get your own information, read up on it. It's all online. Nothing stops us from getting the information that we need. And again, this is not directly necessarily related to every trade we put on a 4-hour chart, but it provides a general landscape, and this is one reason. This is another way of looking at a weakening U.S. dollar. So enough of that. I hope this helps. This is Saturday night, so I had a little more time, and I strongly hope that some of you at least can benefit from this information as we go into the middle of 2025. All right, so good luck to you all. Size correctly. Otherwise, be bold as you can be. Thank you very much. Good luck and mindful trading.